Crypto market research firm observes declining weekend trading activity for Bitcoin. Tim Hakki last updated. February 28, 2024 1:36 EST 2 min read. Bitcoin's weekend liquidity is declining. Nobody is trading Bitcoin on the weekend anymore, concludes a new blog post by analysts at blockchain market data provider Kaiko. So far this year, only 13% of all Bitcoin transactions have been executed on the weekend. This is down from 17% last year and 24% back in 2018. Over that same period covering 2018 to present day, weekend trading volumes on offshore exchanges fell from 27% to 15%. For onshore markets, the same figure fell from 21% to 11%. The historically higher figures for offshore participation suggest crypto's weekend players have typically been retail individual customers rather than institutions. Kaiko's note highlights that weekend downturns have hit crypto-fiat trading hardest. BTC-USD weekend trading volume hit an all-time low last year of 2 million BTC. For comparison, that same figure for Bitcoin-Tether, US trades was 11 million BTC. When looking at the bid-ask spread of Bitcoin, weekend liquidity is poorer on Coinbase than on Binance. The bid-ask spread indicates the variation in the typical bid-buy or ask-sell prices of Bitcoin on the exchanges. The wider the variance, the more illiquid the venue. Finally, Kaiko noticed that none of the transactions related to the 10 recently approved spot Bitcoin exchange-traded funds ETFs happen on weekends. Kaiko's data broadly reflects Bitcoin's current state of play, since the U.S. SEC's recent approval of spot Bitcoin ETF trading has meant billions in institutional money has flowed into Bitcoin. In other words, now that traditional finance has joined the fray, Bitcoin is keeping more regular hours. Bitcoin ETFs pump trading. By far, 2024's biggest price-driving narrative to date has been the ETFs. Today, Bitcoin is trading at over $59, a level not previously seen since November 2021. A carefree time before USD's historic collapse crashed the entire market and spread contagion through it, bankrupting multiple lenders and exchanges. The launches were historic in the sense that the SEC finally made a concession to the industry. Several asset managers, including ARK Invest and Grayscale, had long applied for spot Bitcoin ETF products but were getting knocked back by the SEC. Under Chairman Gary Gensler, the federal agency has conducted a regulation by enforcement approach towards the industry, suing it for alleged offenses against securities laws rather than offering clear guidance on how to comply with said laws. The industry has long argued that it is unclear how current U.S. securities laws apply to crypto tokens. The SEC eventually approved ETFs to trade on January 10 this year after a federal court ruled that the agency's rejection last year of Grayscale's application to convert its Bitcoin trust into an ETF was arbitrary and capricious. Earlier this month, the ETFs took in a combined $1.1 billion in inflows. On Tuesday, market leader BlackRock's ETF recorded an eye-popping $1.3 billion in inflows on a day when the products collectively netted $2.4 billion. Follow us on Google News.